In today's video, I am going to teach you how to use the TradingView RSI indicator. The RSI, or Relative Strength Index, is a momentum tool that helps you gauge when price moves might be stretched and when momentum is shifting. It ranges from 0 to 100 and is commonly used to spot potential overbought and oversold conditions, as well as to confirm trends. Start by opening your chart in TradingView for the market you want to analyze. Once your chart is up, add the indicator. Click the Indicators button at the top of the screen. Type RSI in the search bar and select Relative Strength Index from the results. As soon as you add it, the RSI will appear in a separate panel directly below your price chart. So your price action stays visible while momentum sits just underneath. Take a moment to get familiar with what you are seeing. The RSI line oscillates between 0 and 100. With the default midline at 50, many traders watch areas near the top and bottom of the scale for potential exhaustion. But remember, RSI is context dependent. In strong trends, it can stay elevated or depressed longer than expected. Think of it as a confirmation and timing tool rather than a standalone signal. Next, customize the settings so the indicator matches your style. Hover over the RSI label in the indicator pane and click the gear icon to open settings. Here, you can adjust length, which controls how many bars are used in the calculation. The default is 14. A balanced starting point that smooths out noise while still reacting to shifts. Shorter lengths respond faster, but can be choppier. Longer lengths are smoother but slower. You can also choose the source. Typically the closing price, which is standard for consistency. In the Style tab, tweak colors and line thickness to make the RSI easier to read against your chart background. Clarity matters, especially when you are scanning quickly for signals. You can also change the RSI's timeframe to differ from your chart's timeframe. This is useful if you want momentum calculated on a higher or lower resolution while you analyze price on your preferred chart. For shorter-term analysis, some traders experiment with a 7 to 9 period to capture quicker swings. Just remember, shortening the period will increase sensitivity and can generate more frequent but potentially noisier signals. Adjust thoughtfully and test what best aligns with your approach. That's it. Thanks for watching.